All right, thanks everyone for reading through those disclosures. As I said, my name is Natalie Beckett, and I will be your moderator for this afternoon's webinar. Today we have Wendy Kirkland with us, and she is going to be discussing and broadening your options investing horizon. Wendy, are you with us?
I'm here.
Hi, nice to have you this afternoon.
Thank you.
We're glad to have you. I'm going to go ahead and give you the reins, and you can pull up your presentation. While I do that, if you don't mind,
Okay.
I always love your story about how you basically got started in this business because it's such a unique entrance into the world of trading. So if you don't mind letting everyone know, and then you can go ahead and go with your presentation. And I see it, and it looks great. So it's all you, Wendy.
All right. Well, thank you very much. I will do that. I appreciate everyone who has come to attend this afternoon. For those of you who do not know me, I'm Wendy Kirkland. I've been trading full-time, probably now 12 years, and I administer a number of advisories. Money Block is one of my auto brokers, and they are able to answer a lot of questions about my different systems. I have books that cover basics and then go into specific strategies. And the way I got started trading was the fact that for 20 years or more, probably almost 25 years, my husband and I ran a gift shop in historic Biltmore Village in Asheville, North Carolina. And in 2004, it would have been then Tropical Storm Francis, Hurricane Francis came through. And you don't think about the mountains flooding, but it did, and it wiped out our gift shop that we had everything in as far as our work equity and our inventory and so on. It was a mess, and we didn't have insurance. We had, of course, liability insurance if somebody was to have taken a tumble, but you don't think of it flooding in the mountains. And so we did not have the proper kind of insurance in that particular situation, and it truly wiped us out. And then 2 weeks later, Hurricane Ivan came through, and so where we had mucked out and got rid of the mud and were trying to dry out, it happened all over again. And we were really pretty close to being homeless. We didn't really know what we were going to do because all of our income was involved in that. And a friend mentioned option trading. I took the electric bill, the money we had aside for the electric because it was off anyway, and took some option trading classes, and that was kind of the start for me. Of course, I did not succeed instantly, and it took more studying and so on, but I found that that was a great fit for me, and it put me on this path. A lot of us come to the market by different paths. Some of it is family involvement, and some is our education, and others is profession, and a great many of us, it is financial needs that we need to be able to supplement that weekly paycheck. And I have found that option trading is the means to be able to do that. I can trade from home and or anywhere I am that I have a computer for that matter, and it just works for me. So what I'm going to do is to try to give you some basic information that you can use no matter what strategy you are applying or trading. A lot of this will apply even to no matter what vehicle you're trading. If you're buying stocks outright or Forex, a lot of this information will apply. In a general sense, I have people ask all the time, why are you doing this? You're trading, you're successfully trading, and I feel like this is a way to help give back because we really were in a bind, and if it hadn't have been for the support of neighbors and friends and family, we really would have been in a tough place. We were in a tough place, but we were able to dig out of it because of that support. So I have done that through books, weekly newsletters, coaching, and advisory services, as I've mentioned. Again, as Natalie did, I'm going to ask you to just look at this disclaimer that The main thing is you don't want to trade with money that you can't afford to lose. And it is important to know that right from the get-go, that trading is risky. And you have the opportunity to make a great deal of money, and on the other hand, there's the possibility to lose as well. So the points that I would like to cover today, one is trading times, the other is selecting the very best candidates, and then I'm going to go over 3 essential things that bring about the very best trades. And again, it doesn't really matter what strategy you're trading, this will help. So we're going to dig into the time of the day. The first hour of the trading day, and it really isn't 60 minutes, is referred to is the initial trading period, where trade orders that were placed overnight are filled, and there's kind of this knee-jerk reaction to whatever is happening. It may be up, it may be down, but the market kind of reacts with these orders and any news that's going on the instant that the market opens. And this first hour can be called rookie hour or amateur hour. And this is the time when new traders see the morning move. Maybe you're tuned into CNBC and you realize that it's going to open up, and you get excited about a trade and you jump in, you have your order filled, and then in the next, say, half hour, the market settles back down and their premium drops. Now, this doesn't mean that the market might not climb right back up again to where that fill amount was, but it does mean that you could have been filled at a lesser premium. And then as it moves past that amount where you would have been filled at that higher amount, that you'd already have a profit. Now, the last hour, again, not necessarily an hour, is called professional hour. And this is where the professional traders and the money managers and so forth either take profit or make purchases for the next day. And so to further fine-tune this, we can say that between 11:45 and, say, 2:15 is considered the lunch hour. And often during this period, the prices of stocks will start to slip back, that traders are taking a break and they're away from their desks. And so during this time, if it went into a high of the day, say just before 12 o'clock, maybe it settles back and pulls back again. And then when they come back, the afternoon session takes place. Therefore, the morning session can be anywhere, say, from 10 o'clock to 10:15 after the amateur hour. And then the afternoon session is, say, between 1:30, 1:45 to 4 o'clock. And again, the minutes are not hard and fast. They're not fixed periods. But once you start paying attention, you will be able to see the reversals that take place in the morning, and then during the lunch period, and then maybe at the end of the day. And I guess I want you to really understand that the hourly market timing, it doesn't really have anything to do with whether the stocks are likely to go up or down during any of those periods. It is more that there's apt to be a transition during these periods, that they may go from up to down or down to up, or flat or in between. And then there are the days that just defy all these aspects, and they'll just fly out the gate and stay and run or so on. Those are the exceptions. Excuse me. I've been fighting a cold all week. We had 4 inches of new snow last night and are stuck in. So this is a stock for NVIDIA. And I've marked on here this first candle is the rookie hour candle. And you can see that it has a very narrow candle body, has a wick that goes way up and then a little bit of a wick that goes down. So the dotted line here is the open, and that is the range that it had. So if you had gotten excited when the market opened, you may have been filled up here somewhere close to, say, 71, 75. And then by the end of that first candle, it closed way down here around $71. And that is the place that the second candle opened. So this really shows the reaction and then the settling back of that first half-hour period. Had you gotten in at $71 at the beginning of the second candle, by the time then it reached the lunch period and back up about $72, you would have already been in profit by that dollar move. Then in the afternoon, during lunch, you can see that it settled back again. And then late in the afternoon, there was a little buying and then some more selling off. And this is the professional hour where it is maybe putting in a support level at these previous lows that are here and getting ready for whatever's going to happen tomorrow. But what I wanted you to be able to see is to give the morning a chance to see what's going to happen. You're not going to necessarily miss out, and you want the market to open and then settle back again and then consider what your entry would be. The second point is that you want to trade stocks or equities that have consistent big moves. And the easiest way to do this is to first set up a chart template with a daily chart, because we're talking about the daily move. You want it to have a big move every single day. And to the chart, add an ATR, average true range, ATR. And that is an indicator just like any other indicator that can be added to your chart. And so here we have Alibaba, and if we look, the ATR here says that it's $2.15. So that is on average, up or down, that is what it moves per day. So what we're looking for is stocks that are going to move approximately 2% every day. That's what I want to trade, is stocks that move and have good, consistent 2% moves. So if we look over here, the price is $101, almost $102. And if we multiply that, I can do 101 times 2 is 202. So the ATR is 215. So this is a good candidate. And so what I do is I create a list of high candidate stocks. It might have 25 on them, might have 30, depending. There's periods of time when the market goes through periods of consolidation that there's fewer that have big moves. But what I have discovered is that a 2.5% to 4% move in price is often a double in a weekly option premium, and a 3 to 5% move in price is a double in a monthly option premium. So for me, it makes sense if I'm going to be trading weekly options that I want stocks that are going to move at least 2% a day. Then I can, on average, have my premium double if it moves in my direction every single day or every other day. And that is what helps to consistently have profitable trades. So again, we can look at this and say that this is NVIDIA's ATR is 168, and their premium or price is $70, so that would be 140. So 168 is more than 2%. So again, take those amounts and find your candidates that qualify for the 2%. and create a chart list. And those are the stocks that you're going to focus your strategy on. Okay, now another aspect that I have figured out and I zero in on is that the most successful option trades include three very specific aspects. One is that they were recently overbought or oversold. They have a new confirmed trend reversal, and then they have a confirmed entry signal. So let's look at how I determined that. So the first one is that they were recently overbought or oversold. And so what I have added now to the chart, and I have changed to a 30-minute time frame. Earlier for the ATR, we had a daily chart because we want to know the daily move. For this particular exercise in what I'm showing you, I've changed to a 30-minute chart. So I have added channel commodity index, the CCI, and I have it set at 34 periods. And the 34 is not what the default is. This helps you to smooth it out a little bit. And I call these green and brown arrows the fins. If you think about a fish breaking the surface or the fins that are underneath the water, the brown areas are oversold and the green areas are overbought. And so an area that shows oversold, you can see that this has happened after a big drop, and then it's starting to get ready to go up. And so we're looking for moves that move above the minus 100 or down from 100 when we're looking for the downward move, like you see here on the 15th. When it broke down from 100, that kind of signaled that we're going to have a drop. When it got down here, rose above 100, it started up, then it had to pull back and come down and test the lows, and then started up and then went up from there. So the CCI gives us a very clear picture of overbought, oversold. This indicator works on any time frame. So I've now switched. This is Home Depot on a 60-minute chart. Again, you can see these same fin images. We have gone from oversold down here from the 15th to the 21st, and eventually worked its way up to being overbought, and we have the green patterns. Okay, so the second element is the trend reversals. And I have added the percentage, price percentage oscillator, the PPO. And most charting services have the PPO, but if it doesn't, you can add the MACD. They are read exactly the same, and for the most part, they are, I won't say identical, but pretty darn close. Now, the way that you read the PPO is the fact that price will follow the direction of the black line cross over the red. So if I look here at the 26th, the black line is crossing up and price is going up. If I come over here and look at the 5th, it's crossing down, price is coming down. Then on the 7th, crosses back up, price is going up. So this is telling us that the trend is reversing directions or changing directions because it's going in the direction of the cross. So we are looking for it to have been recently oversold. If we're looking for a long trade where we see that there's been this big drop on the 5th and the 6th down here to the 7th, we're thinking this is a bottom. We can see the bottom on the 28th. Looks kind of like a double bottom. We're anticipating that it's going to start moving up. We can see the CCI crossing above the minus 100 line and starting to head up. We can then follow the PPO crossing upwards and starting to head up and showing us that there is a new trend direction. Here's another one. This is Coca-Cola. Again, we can see that there was an extended period right here in the middle of the chart from the 18th, say to about the 30th, where it was oversold, then it crossed up, and there was a few tests on the way. We look here, and we had the PPO crossed up right here in the middle, and then crossed right back down again, testing this bottom. Then it crossed up on the 31st and just stayed up there for the whole next couple weeks, and just climbed steadily up here to a nice high. So one of the things that I am known for is what's called the P3 pattern. And we have seen a part of it because it includes the PPO. It includes the aspect of being oversold and overbought. And what I have discovered is, I think it's my artist background, actually. Like I said, we had the shop for 25 years, and my husband and I carved decoy ducks and birds, very realistic, and that's how the shop started, and I did other painting and sculpting and so on. And so I see things differently. I see them in almost like artistic patterns rather than coming to trading from a financial fundamental background. So I'm just going to point out, you can see where these two black lines squeeze together, and that's what I call it, the P3 squeeze. The lines have risen and dropped so that the lines come very close together. This is what I call a squeeze. And we're going to look at the charts, and I have no doubt that I don't have to explain a whole lot more than this, and you'll be able to spot it. This one is not super tight. I drew a circle around it, but indeed, the lines have either dropped and risen toward each other. So we're looking at the CCI. We can see that it has been oversold and is rising above the 100 line. So it is reversing its trend direction. Then when we look at the PPO, that's this indicator that is in the middle. And the PPO black line has crossed the red line. The ADX, average directional index, is the indicator that I've put on the bottom. It's those two indicators that create the squeeze pattern. And when the lines start pushing away from each other, that is our entry signal. And I've noted that up here on the 26th. It took a little while for this to get going. The lines pushed away from each other a little bit farther, and then it took off. And you can see all the space here between the PPO line, and it flew and instantly became overbought with this big green fin, and then eventually started flattening out. And then we have the PPO cross down, which would be a signal that the pattern is completely over. We exited soon after this gap because for me, I figure gaps are like a gift, that is kind of unexpected. There's a lot of pressure that built up overnight. It pops up in the morning, and rather than have to worry about, is it going to drop and fill the gap? Is it going to go higher? Is it just going to go flat? For the next couple of days, it did go a little bit higher, but for the most part, it just juggled back and forth. And it was like, thank you very much. I'm done. I'm out of here. The pattern did exactly what it was supposed to do. So here's another example. And this one, I didn't draw a circle around it. because I'm sure now at this point you can spot them. The PPO dropped way down, the ADX dropped up. You have your P3 squeeze. You can look and see that you were recently oversold. Then it kind of flattened out. It rose above the minus 100 and then started tapering up. You had the cross of the PPO heading up, and we entered right here, and pattern flowed and went through all its stages, and you had your exit up here toward the top, toward the point where you reached your highs from the previous period. You can also then see from that point on, you had the PPO cross down, and that's where we start seeing the weakness and the trend reversing. So I want to point out, before you all run off headstrong here and say, woohoo, I've figured out the P3 squeezes, I can see them, is the fact that there are times that they do not play out as anticipated. That said, I'm going to point out that every single time they formed, and we'll look at this first one here, had recently been oversold, headed up over the 100 line, PPO crossed and the lines started pushing away from each other. There was a period where it went up. It went up for the better part of that day, and then it fizzled out and flattened and came back down, created another P3 squeeze. Again, it went over the 100 line, PPO crossed back up, the lines pushed away from each other. Again, it went up. It went a little higher than it did on the previous pattern, and then it failed and fizzled, created another P3 squeeze. So these squeezes, it always goes up. When the PPO crosses, it always. How much is the variable, and you want to have confirmations that everything is working and in place for it to have a big move that really pays off. And so here on this third one, you can see PPO crossed up. Again, it was recently oversold, crossed above the minus 100, went up, and then price just climbed and climbed and climbed. So in this 45 minutes that we're visiting, you're seeing that these patterns work, and we'll go through a couple other examples, but you want to be able to really learn and have all the confirmations in place. Here's a couple that show it playing out just so that you can see. Again, I drew a circle around the first one here on the 28th. Recently oversold, crossed up, PPO is crossed up, lines are pushing away from each other, and price headed up. And you can see the PPO just headed straight up. Here's another one. Again, a really nice tight pattern. And there's only two of these patterns on this whole chart. There's all kinds of little dips and zigs and zags, but there's only two P3 patterns on this whole chart. Again, recently oversold, crossed above the minus 100, PPO crossed up, lines pushed away, up it goes. So I have traders all the time ask and say, okay, well, I can see the P3 pattern working for calls for when you're getting into a stock purchase and expecting the price to go up, but what about the short side? And it took a long time for me to come up with what I call the P3.5 short pattern. Again, here's a place where it came close together. I've switched things around here and we're looking now at recently overbought, has crossed down below the 100 line, And then you have the ADX line and the PPO line pushing away from each other, and stock starts dropping. And here's your exit. So you're having the PPO cross down. Again, remember that's your trend change is showing from it having been up on the upside. Now you're looking at it to the downside, and ADX and it pushing away, and price drops. So this is my contact information.